All right, good morning, everybody. All right, hope everybody's doing well. Yeah, as always, right, we're about to start with this. So today we're going to talk about, or just like go over some of the critical aspects that I talk about all the time, but I just want to make sure that everybody understands exactly like the process and sees just how repetitive it is. What's up, what's up, what's up? Appreciate y'all hopping on. Yeah, let me go pull up this little document that I made this morning. All right, can y'all see this okay? And let me know if y'all could hear me okay as well. I really appreciate it. So let me know in the chat real quick if you can hear me okay. Don't want to go through this and have some issues. All right, Tony can hear me. Casablanca can hear me. All right, cool. All right, so every week, for the most part, I like to go over very specific things. Those of you that hop on continuously, you're going to obviously see the elements that we look at every week. We're going to discuss, obviously, what happened this previous week as well, but then also talk about what's going to take place moving forward. So every week, and then, most of the time every month as well, we look at specific aspects that dictate where the market's going to go or what could potentially influence the market going in a particular direction. A lot of people call this macroeconomic reports. It's not like super like PhD, I went to college for economics type stuff, but it is the very important aspects that ICT uses to justify a specific sentiment, right? So, and pretty much all that has to do with is, at least for us and ICT traders that employ this type of logic, our COT, obviously risk on, risk off, which is pretty much just what the whole market's doing as a whole. And then seasonality, along with interest rates. And then once we do that analysis like we did last week, we could then go to the currencies, DXY, EU, GU, and then obviously to the indices. And having basically all that on the back end, we're able to then go into the indices with, like a good layered approach to why we think the indices are going to do one thing or another, or why it shouldn't do one thing or another. All right. I'm going to also have this PDF in the description for those of you that want to download it and just have like a template so that maybe you can go and do this type of analysis yourself. And then you could kind of have like some stuff that you can implement into your own reports, right? So risk on, risk off, right? What is that? I'm sure most of you guys know what that refers to, but it's pretty much the sentiment and relationship that all the markets we look at, like the sentiment between all of them and what that is telling us could potentially take place in specific assets that are important to us. Obviously stocks, indexes, commodities. I don't really pay attention too much to gold or silver or anything, but I do glance at it from time to time just to add on to what we're already looking at. But just because but just because the gold or silver or other commodity markets are doing something, that's not going to dramatically impact what's going to take place across the different markets. A lot of times that's influenced by what's taking place in the world, That's why I don't really trade gold, although, there's a lot of gold traders, and nothing against that market, or silver, or any of the other commodities like corn, wheat, right? All those different things. I just don't, I just have to glance at it from time to time. But the main thing is the interest rates and how everything's working together as a whole. We want to see majority of the markets moving in a particular fashion, so then we can gauge whether we're in a symmetrical market, or if we're in a market that's lacking symmetry or correlation. Because if it's lacking correlation, if everything's disconnected, then that's telling you the condition that we're currently trading in, whether you're trading in currencies, whether you're trading in indexes. It tells you when things are disconnected that, we're not in a symmetrical market, and things may, maybe a little harder to justify for one direction or another. A lot of times that leads us to consolidation. A lot of times, if the interest rate markets are consolidating, or if they're not in like a trending environment, if they're just like range bound, if you go back and study what that does to the other markets, like in our case, the indices, a lot of times, if those aren't doing something like moving in a meaningful way, that's going to lead to DXY lagging. That's going to lead to the currencies, EU, GU lagging. And then that's going to, like I mentioned, kind of have an impact on the indices. So if you're stuck in a consolidation, next time, knowing this information, go and break down what's happening across the different markets and look at the interest rate markets specifically, because a lack of trending environment or one-sided direction in the in the interest rate markets, it's going to impact what the DXY does, what the indexes do, because like we talk about all the time, that has a heavy influential impact on what the indices are going to do, what the DXY is going to do, so on and so forth. All right. So keep that in mind when you see the market consolidating, right? Go and look at what the interest rate markets are doing, and then, cross-reference what the DXY is doing, what the indexes are doing, just so you can build a log, like a study log of the impacts that has. So then you can start to really see the power, aside from us calling, what the interest rates are going to do, and then seeing it play out in the indices. You also got to take note of, when the interest rate markets are consolidating, what that does to the other markets is very important situational knowledge. Does that make sense? So, if you guys haven't screenshotted this already, definitely do that, because this is pretty much... So T-bond and T-note, they're pretty much the same, right? It's basically the same market. The T-bond market is basically just referring to the 30-year bond market, okay? Because there's a 30-year, 10-year, and a 5-year. They have other ones too, but to keep things simple, we just pay attention to those. And then we have the 30-year, 10-year, 5-year for the bond yields as well, right? So bond yields. A bullish yield market, bearish T-note or T-bond market generally leads to bullish DXY. And if that's the case, you can take that and translate it to what the other assets would do as well. And then obviously vice versa. Bearish yields, bullish T-notes or T-bonds equals bearish DXY. All right. And then of course, if those are consolidating, that has an impact on what the other markets are going to do in relation to that. All right. And I go over this specific thing over and over and over again every single week, just so you can pay attention to it. And then, because once you pay attention to it, you start to justify the importance of it. And then next time you want to see the indices go higher, or the indices go lower, or the currencies go higher or lower, you now have this type of logic to reference and solidify and separate you from majority of people that trade these concepts. Most people don't use these markets to analyze, which is surprising, because ICT's very beginning, of his mentorship content, the 2016 stuff, he's talking about or referring to these things. And he says just how important it is, and people still overlook it, and they say, oh, it's too much work, but, like I continuously say, it's also too much work and stressful as hell to not make progress and not succeed. right? So yeah, I hope all this makes sense so far. But yeah, so let's look at the news for this week. We have a holiday on Monday. So what does that mean? Day before, aka Sunday for this example, the day of Monday, and the day after, being Tuesday, in this case, are generally low probability. Automatically low probability, because the day before the holiday, volume's kind of dropping off because people are probably not even in the market. Day of the holiday, the market closes early, so there's no use in even trying to push yourself too much or at all. And then the day after, they're coming off of holiday volume, right? So you want to keep that in mind. Again, it's another situational awareness tactic and understanding of the specific conditions. You got to know when to trade, when not to trade. All right, when should you push, when should you not push? And this is part of that. There's a bunch of different pieces to that, aside from holiday vibes. But, just start making a list of these things as we do these calls, and you'll start to have a pretty large amount of clarity as far as when you should push, when you should not. Mondays are generally harder. Doesn't mean you can't trade, obviously. For those of you that have seen Mondays deliver, just lower your risk by half on Mondays, just by default. Friday, same thing. We're coming off the end of the week. Tuesday, Wednesday, Thursday, especially if it's been super aggressive, you may be able to catch a retracement. But if you don't know how to frame a counter trend idea just yet, you're going to want to learn that before you think, okay, let me just push, especially if you're trying to take on funded accounts, because you don't want to make mistakes that are unnecessary. And again, most people don't do the due diligence to understand this specific aspect of things. They just want an entry. They just want to take a trade. And, you guys know how that generally turns out, so. But yeah, so going back to the news real quick. Thursday, Friday is most likely going to be where my attention's at. I like unemployment claims. It's one of my favorite. It's not too crazy volatility, but it does give you a little injection of movement. And then PMI may be pretty impactful. It may have a quick move, especially if all these other days, Monday, Tuesday, Wednesday, Thursday, are slow. Like if nothing happens, if it doesn't really do much, but there is equal highs or equal lows, PMI may be used to purge that out. I don't have too high of expectations for this coming week. We are going into the end of the month. So if you think of Power of 3, it's on the monthly chart as well, right? There's Power of 3 on the monthly chart as well. So you got to think about that as you approach the end of the month, right? So again, going back to what I was saying a minute ago, when to trade, when not to trade, when to push, when not to push. End of the month, beginning of the month, first week, and the last week going into the new month to end this current month is generally a time where you also lower your risk, lower your frequency, or just don't trade at all. Because, it's just one of those things. We come into trading thinking, oh, day trading, I'm going to be a day trader, I'm going to trade every day. Well, if you trade every day, that doesn't mean you're going to make more. That means you're risking more. Because if you continuously lose because you're trading in situations where you're not dropping your risk, or you're just not accommodating for the elevated risk profile, you're going to stumble and unfortunately invite the negative thinking like, oh, I can't trade. I'm not a good trader. Does this stuff really work? It's generally when you take losses, if you know what you're doing, obviously, you're going to be trading in an environment that's not conducive for good results. Again, it doesn't mean nobody can trade those days. Doesn't mean that. It's just if you want to be a professional, you got to know where the landmines are sitting at. And the things that we've mentioned so far, those are some of the landmines. Holidays. You can also add NFP, FOMC, interest rate announcements, Fed speeches. Those are all times of elevated risk. Okay, and when you know that it's elevated risk in the market, or there's going to be low volume because of a holiday, or things like that, you want to be able to adjust your risk profile. Adjust your risk management. Have that in your plan, so you already know, like, okay, when these times come, this is how I need to operate, because I'm a professional and I'm not a lunatic trying to be a signal junkie and just take anything and everything. The process that we go through on a weekly basis also kind of helps you narrow down better scenarios. And then obviously, like I mentioned, watch out for the landmines that are sitting in front of us, a lot of times. All right, so that is my view on the news events. So yeah, COT, generally COT is very much a lagging indicator, which I have explanation of that in the later slides. Just keep that in mind. COT is not a be-all end-all. It's very effective. My mentorship students saw us call a drop before it happened, like the big drop in December. We were ahead of that. We knew that it was most likely going to drop. We saw a cracking correlation with the DXY going higher, and the indices were also going higher. That cracking correlation mixed with COT showing us a bearish sign, which we pointed to like right before, like a week before the drop happened, allowed us to be patient and wait. And then once the drop was initiated, the change in sentiment took place, and we were able to see and make sense of the change in overall direction, and be confident that it was going to start targeting some sell side versus those that were trying to chase it to the buy side because it was just going higher for so long. All right, so some of the tactics that allow you to have that type of anticipatory skill, we're going to kind of go over. But this here is a good thing to screenshot because open interest is this purple line here. The COT is a red line down here, right? This solo red wavy line. And when you see this type of behavior happening between the COT and the open interest line, generally that's going to lead you to assuming that something may take place. A lot of times this happens a lot of times closer to a new quarter. It helps you anticipate quarterly shifts. Like if you see one of these signs taking place and we're moving into a new quarter that was one-sided to, maybe it was bullish, but then you see the COT line and the open interest line doing this, the open interest going higher and the COT line going lower, right? So say this one's going higher, this one's going lower. Generally, that's a sign of bearishness. And if you take a look at this, right, higher, COT line's going lower here. That's how we were able to anticipate once this dropped, we were going to be able to anticipate continued downside because the lower COT line with the dramatic rise in open interest means that they were offloading their buy positions, which again, that's something we discussed in detail in my private community as it was happening, before it happened, like a week before. And it allowed us to not push trust in this market continuously going higher with the cracking correlation with DXY going higher, which again ended up resulting in this dropping lower and then continued the downside move that we've been able to consistently be on top of as it was moving lower and before it happened. It worked perfectly, and I've seen the pullback happening before based on sentiment. Beautiful, beautiful. So yeah, I'm glad to hear that you use a lot of the things that we talk about here, brother. So yeah, I hope you continue to learn some new stuff. We still have a lot to cover. We haven't discovered all the magical things yet. Haven't touched on everything in terms of the weapons we have at our disposal and what the last 5 years has shown me. So I'm excited to share a lot of different things with you guys. But yeah, do you guys have any questions so far? We're going to do some analysis on the current COT to see what we can snag away from this to see, what could take place. But yeah, you guys have any questions so far? All right, for sure. So at the current moment, you have me looking at this as a professional based on exactly, Tony. Exactly. That's the goal. No mentor can tell you, yeah, guys, you're going to 100% be profitable. 100%. Take my signals, take my analysis, and you're going to be 100%. That's not at all the point, right? Some may claim that that's their point, but you should run away from them because they're liars. Okay, they're complete liars. So the point here, obviously, the goal of this channel from the time I started to the time now, and beyond, is to allow you to have the opportunity to gain clarity in your analysis. Once you get clarity, it's no matter who you learn from, ICT or anybody else, it's all up to you to be profitable. You can have just like if someone had like a pistol or something, just because you have a pistol for protection doesn't mean you're going to be protected. You have to know how to use that weapon. If you can't use the weapon properly, what good are the tools? If you use the wrong tools for the wrong things, like you don't know, what you're supposed to do with particular tools, then how are you going to be able to be effective and have that tool be an asset to you? So the whole goal here is to get you clarity with different tools, different ways of viewing things. Keep it as simple as possible, obviously. And then it's up to you to implement the tools properly, continuously learn the proper ways of using different weapons, and, eventually, get you to that level of independence, whether you're in my private community or whether you are, here on YouTube with me. So I made the mistake of not following my rules and I paid for it. Yep. Just take that as you're basically paying for wisdom. Never look at a loss as a loss. It's always a lesson. It's always a learning experience. If you don't do it wrong, how are you going to know how to do it right? You could learn stuff from somebody, but, we're stubborn creatures. A lot of us need to learn through experience, and sometimes that's painful. But hopefully, you guys just looking at the things that I share with you guys and then implementing them or just viewing them in your chart and seeing them come to fruition, hopefully that'll build the trust in the different tools and weapons I try to expose you guys to. Some you may have learned before already. Some you may learn totally brand new. But I hope you can start to see the context behind different things and stuff like that. I was trying to say I never really considered COTs. Didn't really have anyone explain it to me. Okay. Perfect. You're going to see, again, like I mentioned earlier, COT is a lagging indicator. Again, those of you that were here with me, definitely my private community, we saw this taking place as the indices were rising aggressively going into the end of the year. This COT signature, based on these little components here and behavior, once we saw that, we knew, okay, pushing buys is probably more risky than it has to be. If you think of the yearly power 3, because there's a yearly candle, right? So there's power 3 across that too. ICT's actually talked about that. I think I have a screenshot of his explanation of the yearly power 3, which is a very interesting way to view things. Very long term, obviously. It's not something you would just obsess over every day. But going into the end of the year, you can imagine if it's been super bullish, it's just right for them to try to punch down on people. Plus, there's a lot of profit taking, aka offloading their buy positions, for tax reasons, right? Maybe they want to document losses to push against their income. Some of the more wealthy individuals. But yeah, this little tactic here is very interesting. So the fact that you're just going to learn this now, you're going to have the whole year to observe these different characteristics. And I hope that the more that we go over this stuff, you're able to implement this. Again, it's not a tool where if you don't learn COT, you're not going to be able to be profitable or consistent. It's just another layering factor that separates you from everybody else. And it makes sense of things like this, right? Everything was going higher, but it dropped aggressively. Most people were shocked probably. Like, oh my gosh, what's happening, right? We weren't, and that's all because we understand certain elements like this, right? So yeah, it's definitely an eye-opening thing, bro. So looking at the COT, you guys probably see these, 1, 2, 3, 5 lines here. So when you look at the COT, the specific COT individually, like this line down here, it's on barchart.com. You go to barchart.com and you can pull these charts up. Just put them all together and screenshot of them. But when you're looking at the COT, this outline here is basically ICT's buy and sell program identification process, right? The larger, more extremes like the low and the high here and the middle line, that's more of a long-term perspective, maybe on a monthly basis, maybe on a quarterly basis, essentially. But these middle green lines here are the ones that I really like because these help us as day traders. You know, they are the more near-term buy and sell program identifiers. And, you know, sometimes COT can be deceiving, right? But again, if the COT does not align with what you see in the chart, then you just have to wait and see what happens as price continues to print. But for the most part, breaking down the COT like this from the last 6 months extreme to the last 6 months extreme low, right? So extreme low and high. And then you break down the middle point there of those two extremes, and then you find your actual zero line, right? So you can see the supposed actual zero lines up here if you're just looking at it from the website. But if you just break that in half, you can get the actual true zero line to show you the real reading and how you're supposed to be seeing things per ICT's explanation. And then you break those upper and lower halves in half one more time. That puts you in line with what could potentially be taking place in terms of a near term, more of a weekly style buy and sell program identification. So yeah, you can see we're above the zero line here, but we're in the lower quadrant of the upper half, right? The lower quadrant of the upper half, above the new zero line, the actual zero line. So what you do with that information is you take that and you look at where that's at. So overall sentiment in this case is potentially bullish still. It does still have a bullish undertone, but we're inside of the lower quadrant, right? So it's not unreasonable for them to have continued to drop. Now, though, we have definitely shifted market structure to the buy side. So we'll see what happens as a result of that. So there's an overall bullish undertone, but we're in the lower half of the upper half of this overall COT diagram here. So we want to take that as price having that bullish undertone, right? So this move higher is not unreasonable. And then obviously, because we're in that lower half here, we can see how price continued to drop as a result of the COT relationship between the open interest and the COT behavior. Does that stuff make sense, you guys? I hope that made sense. Let me know in the comments if that made crystal clear sense. If not, we can try to make sure that whatever questions you have get answered before I move on. Just let me know in the chat real quick. All right, so as you guys can see, we have this large drop. Okay, perfect, Tony. Thank you. So yeah, we got this large drop in open interest. Now price has started to gravitate towards the middle portion. Now we've crossed over that middle portion. So a aggressive lower open interest and a rising COT, right? If we scroll back up, right? So a dropping open interest and a rising COT line, that's a bullish signature. So if we go down here and look at how the COT dropped, the COT rallied, basically crossing past the midpoint, and then this large drop in open interest, you can start to see the lagged response, right? Like I mentioned earlier, it's a lagging indicator. It doesn't, just because you see a signature happening on the COT the same day, doesn't mean that same day is going to respond to that. Sometimes it takes like a week or so to kick back in line, right? So we can see how, yet again, similar to what happened here with price dropping, And us being able to anticipate that because of the bearish signature between open interest and COT line, we now see the bullish side of that view. And you can also see how it lagged and then finally blew through after taking sell side, these equal lows, finally blowing through, pushing to the buy side. Does this mean that it's going to continue going higher aggressively? Maybe. We'll see. As of right now, there's nothing to favor shorts at this moment. The last final line in the sand is going to be this high here, right? We do have a fair value gap in here. Right? We have a tiny one in there. We have a small fair value gap in here as well. We do have this inversion fair value gap on the S&P. We have a bunch of tiny fair value gaps in here, but we have this volume imbalance there. But all in all, none of this showcases that, okay, when the week starts, we're going to start to buy, right? None of that shows any of that just yet, right? We got to think of power 3, and it definitely doesn't show anything about sells. Only time I would be interested in sells is if we break down below this down candle. Only time for the Dow would I start to think about sells is if we break through this fair value gap in here, because then that would potentially turn to an inversion, and then our eye would go directly to this here. But again, this bullish signature here, we got to see going through the rest of the week, in this coming week, we got to see what that's going to do. Are we going to justify by breaking down below this, maybe having a bearish week, to then maybe set the tone to get down into this area? May take place. Or are we going to blast through the highs and continue to go higher? You can argue that these down candles here present us with a bearish breaker, right? These consecutive down candles here, you go from this low to the high up there. The last line for me on the S&P, the NASDAQ here is this high. These consecutive up candles here, if you remember some of the analysis I did last week, this was a 3-day bearish order block, right? This was another 3-day bearish order block. It respected the midpoint of that one, so we were justifying continued downside and our bias was bearish. What happened? Price slid down, took it out from the analysis the previous week, right? Now we're looking at this. It's definitely made a good response through the midpoint of that, our line in the sand, which we're going to look at on the other the actual chart and break that down further. And that's also corresponding with this bullish COT analysis, right? The bullish signature based on this little chart thing here, right? So with all that being said, we have a pretty strong argument that, price is potentially going to continue going higher. Longer term, like for the next couple weeks or so, or going into next month, we got to see if that's going to sustain. Currently, you can see that price is not really in a very clean environment. That's typical for January, right? It's the start of the year. People are probably just coming back from vacation. That's part of the reason why ICT doesn't start to push his trading, like his actual trading, until February. He likes to let the holidays and the first initial start to the year pass, so that the real players end up getting in the market for sure around the first or second week of February, right? Again, doesn't mean you can't take trades. We've been in the market navigating everything for the past couple weeks, just observing what's taking place. We called this downside move, as I mentioned, but just again, it's another rule of thumb. You got to be able to get a feel for what the risk environment is, and based on the fact that there's holidays and New Year, and if you were rich, you'd probably be on vacation still, right? We got to factor those things in when we're looking to engage. Again, it doesn't mean there's no opportunities. It just, if you ask yourself, are there better opportunities? Are there better conditions to trade in? And, if you know that, wouldn't you wait? Right? Especially if you're doing this for a living, or you're trying to do this to solidify a retirement or replace a bill, or, whatever your goals are. Wouldn't you want to be in the best position, in the best conditions? Again, that is not in any way saying that there's no opportunities during these more difficult times, right? It's just, again, you want to be aware of these things. It's important to keep this type of stuff in mind. Some people say it's the boring stuff, but guess what? it is what it is, right? There's boring things to everything. And most of the time, those boring things, you becoming a master of those boring things is the reason that you separate from those that are here for a little while and don't really survive, you know? So yeah, I hope all this stuff makes sense. All right, I'm okay. All right, for sure, all this stuff makes sense. But yeah, if you guys have any questions, let me know, obviously. But like I mentioned a minute ago about the lines down here, the upper extreme and the lower extreme is the last 6 months, high and low. Basically, the range between the last 6 months, generally you break down that range, cut it in half, and then you get your actual zero line opposed to the one that's by default on bar chart, which is generally the wrong one, right? It's very manipulative. A lot of people say this stuff doesn't work. It's not useful. Well, most of the time they're looking at it incorrectly because it's very deceivingly like placed. You know, a lot of the real things are hidden in other ways of viewing things. And obviously this is the way ICT looks at it. And, you know, as you guys could see, a lot of times looking at it this way is much more effective than looking at it the traditional way that 99% of people are looking at it from. All right, so anything above the new zero line generally can be looked at as a bullish sentiment. Anything below generally can be looked at as a potential bearish sentiment. If you cut the upper and lower quadrants in half, you can have the more near-term buy program is above, especially if we're above the zero line, that's a bullish sentiment. And then if we're above the upper quadrants middle line, we're most likely in a buy program, right? From majority of the view, right? Because from the larger view to the more near-term view. If we're above the zero line and we're below, right? Sometimes if you see price decline within and we're within that, that could mean that we're just in a retracement, potentially, right? You got to always correlate this back to what the market's actually doing. And if the COT analysis you're doing does not justify on the actual chart, then that just means you have to set COT aside, maybe wait for a month and just let more data print, because then maybe it'll catch up and start to be more clear, right? Sometimes that happens. It can go in and out, right? So again, this isn't a be-all end-all, but when you have a bias and narrative on the higher time frame and you want to justify whether it's going to be a more longer term, more sustained price move in that direction, if the COT can align with that, and then you maybe couple seasonality with that as well, you can start to see that the back-end fundamental drivers behind the market, including the interest rate markets, can really, really solidify an opinion on one way or another. And then obviously if everything's disjointed, COT is cloudy, then obviously you have to adjust your risk profile and your risk management. All right, so does all that stuff make sense, you guys? I know we kind of talked about that already, but I just wanted to make sure. Give me one more confirmation and then we'll move on to the others. All right, I'm gonna just assume that I'm gonna assume that it's all good. But if you have questions, let me know. But yeah, and then of course the interest rate markets, bullish correlation. If DXY is gonna go in a bullish direction, we gotta have the bond yields going higher, the trio, and then we also gotta have the T-note going lower. Bearish for DXY, the confirmation for that between the interest rate markets is a bearish yield market, bond yield, and then a bullish T-note or T-bond market. All right, so here's the seasonality for the 30-year and the 10-year T-note. Right, and you may be looking at this thinking that it looks insane. That's perfectly fine. The main thing you want to focus on, as we talked about I think we talked about in the previous video. We're not going to go too deep into seasonality right now, but you want to identify different points of the year where all three of the markets or all three of the lines, the time intervals, are going together. That gives you a high chance for that seasonal influence to take place in that particular month. You want to identify where it shows that highs are being presented, lows are being presented that create a big move, because those can generally lead you to anticipatory skills based on what are seasonal highs and seasonal lows. All right, so that's a wonderful study to do. You just take what you see here, make an assumption of what you see, then you go back to the market of your choice and identify how often that particular observation took place over the last 10 years. Definitely add that to your studies if you haven't already. But yeah, so now we are into what we currently have in the markets. Sorry about that. Can y'all see everything okay? Just to make sure to kind of give me like a... All right, now it says excellent. Okay. But yeah, so currently we have the bond yields pushing lower, right? Or at least it gave a large move lower, right? It just wicked down. I'm not sure if you guys can see this perfectly clear. Let me see if it's not going to let me zoom in. I hope you guys can see that clearly. But yeah, we got a weekly fair value gap here. We got a 2-week order block. All right, we got a daily volume imbalance for the 10-year yield. We have a weekly fair value gap that may continue to hold price and push it lower. We got to see how that's going to respond. I had this outlined last week as a possibility. Looks like we literally just came out and swept the low from 2 weeks ago and the high from 2 weeks ago. So you can see we kind of seek and destroyed the week before last week, that liquidity above and below. Definitely worked both sides inside this weekly fair value gap. So we're going to see if it holds there, then my assumption is we're going to probably have a more meaningful drop to the downside. What does that solidify? What does that confirm? That confirms the possibility of that bullish COT on the indices. That confirms that, right? That could potentially be something that we can end up trusting going into the next week or so, maybe even into the next month, right? We'll have to obviously wait and see if that takes place. But so far, it looks like we've worked both sides of this weekly fair value gap that should have held price lower or should have acted as support to push price higher. It looks like we're pushing more towards the downside. Again, that justifies the bullish COT analysis we just observed. So you can start to see things start to get in alignment, and you could narrow your focus in, like zooming in the scope, right? Or making the scope more accurate on a sniper. You know, you start zooming in a little bit better, and things start to fall into place and make more sense. So again, that's the trust factor. All these things that we do is for clarity and trust. You know, it gets you one step forward. Each element gets you one step closer to clarity. Clarity gets you one step closer to consistency. Consistency obviously would lead to potential profitability, right? So I'm going to continue to see if we can continue to justify price wanting to maybe reach a little bit lower here. We will see what takes place when it gets down into this fair value gap. This one has reached into it a little bit, the 5-year. We can see how, you know, it kind of hit that and then came off the low. And then obviously, again, we've worked both sides of this fair value gap, both sides of this fair value gap, offering buy side and sell side. And then the 5-year down here offered in this fair value gap, didn't mark that one, but just keep that in mind. You drag that over, we offered buy side and sell side. So if we push away from that to the downside and we use it as resistance, that justifies this fair value gap as a balanced fair value gap. And if we start pushing away from it, that fully confirms it. So then that would justify, alongside the bullish COT for the indices, that would also justify that as well if this goes down and pushes away from this fair value gap. Again, we'd have to see what takes place inside this weekly fair value gap, weekly bullish order block. Same over here, right? It's got this fair value gap. It's a little bit deeper for the 30-year, but then you go over here to the 10-year as well. All of that stuff is in alignment. It makes reasonable sense that it would want to do that. right? And then again, depending on how it responds from that level, would then justify whether we're going to have a deeper drop and maybe attack the lows here, the low here, maybe this lower, deeper fair value gap. But if it comes down there, holds, and then pushes back through that level, going maybe through the midpoint of this potential bearish order block, then that would justify us continuing to maybe then turn around and target this weekly high here as well. But yeah, we're gonna have to see what takes place. I'm going into the next week favoring that this is gonna hold and price is possibly gonna want to reach lower, right? So this is gonna reach lower. My assumption is that DXY may also look, if that takes place and continues to be justified, we'll look and see if DXY wants to also continue to maybe reject a little bit lower, right? But again, if it opens up the next week and then just starts blasting through this fair value gap, leaves the fair value gap down here, then obviously that may justify DXY having having further meaningful runs to the buy side, which it started doing this last week. But we'll talk about that when we get to that, right? So here is the bonds, right? So that's the opposing view. This goes with or influences the indices and the currencies. The bond yields that we just talked about influences the DXY. So if you look at this weekly chart here for the bond market, that again influences what the indices and the currencies are going to do. We could see that price has done a similar thing here with this weekly volume imbalance, right? It offered sell side, offered buy side, blew through it a little bit, but then we came back. If you roll over here and you could see this large wick here. Can you see that? Yeah, you guys can. This large wick here, if you break it in half, we have the midpoint there. Price couldn't even get to that. It hit the quarter point of that wick, and now we responded away and got outside of this weekly volume imbalance. So if we push away from this to the buy side, what's to the buy side? We have, first of all, we got this 2-week order block, right? So we got to see how that's going to impact price. It looks like it came right to it and rejected closing the week. But then we also have the rest of the fair value gap up here it could reach for. We have this wick here as well. It did hit the midpoint and reject off that. So we'll see if that's going to have any influence in either holding price or if it just breaks through it and then again maybe tries to reach this weekly high or the rest of this fair value gap. I'm assuming that if it stays above this weekly volume imbalance, we're going to continue to target the upside here. And then if it does prove that that's the case, then obviously we can end up trying to target this up here. And if it breaks above this and closes above this candle's high, right? If it closes above that, this then becomes a bullish order block. All right, so then if it was to draw down into that, if we were going to trust sells further in this market, if it does break above that and close, the only way we would trust sells again is if it violates the midpoint of that and closes below that. And that would then adjust us to target the lows down here, right? If we open and then just get a really strong response to the downside and then start really contesting this, then obviously we may not be done with the sell side delivery. But again, we don't want to get too far ahead of ourselves. These are just obviously some things to keep in mind as we look at price. I wouldn't, again, be surprised if we get some type of retracement. It's been very bearish. We have one candle for a retracement. We still have a order block to dig into, at least for the 10-year. We have relative equal lows, wide open, very obvious relative equal lows, a triple low here, merged with the fair value gap. So that may lead to a problem in terms of this going higher, right? Again, we're going to have to see what happens here. We see these two overlapping candles, right? These 2 weeks overlapping. When you see candles doing this and you're going into the week after, like this current week off the heels of this type of behavior, you got to realize that this is technically a consolidation, right? It may have retraced, right? But back and forth price delivery here, we technically did a seek and destroy week last week in relation to the previous week, right? So this weekly candle's high got blown out and the low got blown out, right? So with that being the case, it can do either thing. It can go down and attack the lows. It could stay in alignment like this and just overlap because it's almost the end of the month, or it can blow past the high one more time and then try to retrace. And then however it behaves when it's in this level here will dictate whether we're going to try to continue to seek maybe this fair value gap, maybe this high, or if it's going to use that as a trigger point to then try to blow out the rest of the lows down here. Lower targets as well for the 30-year. That's what this one is, 30-year bonds. We have a volume imbalance as well that's wide open. So we got to see how the wick is going to play an impact, right? Is it going to hold as a premium array and then start pushing price lower again to contest this fair value gap and then maybe contest a low? Or is it going to blow past and try to reach up into this fair value gap up here, right? So we're going to see one of those two things are going to take place. If it blows past this wick here, then obviously we can use that information to then position ourselves and target this weekly fair value gap and adjust. If it does not and fails and then starts aggressively pushing lower, what's our target? Our target would then be this low, right? It's very simple verification process, and obviously off the heels of overlapping weekly candles, which generally leads you to low probability, high resistance delivery. And again, like I mentioned very early in this call, if you see the bonds and yields showing not really much interest to go to one way or another, you got to consider that as a reason for the indices and the DXY and the currencies, the other currencies, to have a bit harder conditions to trade in. And what does that mean? You just lower your risk. Doesn't mean you don't trade at all if you must trade. It just means you got to lower your risk, have lower expectations, take the bare minimum 5 to 10 points in the S&P, 20 to 30 in the NASDAQ. And if you take that, you sideline. If you win one trade and you're trading in that condition, you take one trade, you win that trade, you hit the sideline. You don't push for fulfilling your funded account. You don't do any of those things when you're in that type of environment, when you observe that. All right? So yeah, I hope all that stuff makes sense, you guys. We got to see what the week's going to do. Is it going to respect this wick here and drop lower? Or is it going to blow past it and then try to target the fair value gap up here? We've been so aggressive, I wouldn't put it past price going up to these highs, right? And then taking this fair value gap, and then whatever it does there would determine whether it's going to have sustained buy side. If it does do the sustained buy side move and target this, again, that goes behind the bullish COT that we observed, right? So that may very well take place, right? So we just got to see how that's going to behave. We also have, again, this order block here potentially. If it closes above that, this could act as a bullish order block, right? And if that blows past that like that and, gets up into here, we got to see what the response is going to be from here. And then for us to trust sells again, it's going to have to violate the midpoint of this order block right here, okay? We have pretty much worked inside this fair value gap as well. So we want to drag that over and see if that's going to hold as support. If it blows past that, then that's another level of inversion that we can also utilize to justify a move going lower to take out these lows as well. Right, so it wouldn't be unreasonable for them to retrace to start the week, maybe set the high up in here with this new candle that comes out to then maybe drop. Right? And then again, because it's the end of the month, we do run the risk of price slowing down and not having any sustained move, because the month has been pretty nice, right? It's had some pretty good price delivery, but then obviously there was some times where it was a little bit more difficult. But yeah, I hope that makes sense. Let me know if you have any questions below, and we will move on. So that was the weekly chart. Let's look at the daily chart here. So we have Friday's low here and Friday's high. If it's going to do any of those situations that we just talked about, the first liquidity pool you want to keep in mind and study how it's utilized is the previous Friday's high and low. That's the most near-term liquidity, regardless of what we think that weekly chart's going to do. Because, what we just analyzed was the weekly chart, right? So we got a feel for what the weekly sentiment may be, what the weekly targets may be. But now we're looking inside of that weekly price delivery and seeing what could potentially take place here as well, and what targets we can outline before the week even starts. We could see that there is a shift in market structure here. We'll see if that is sustained. We do have a fair value gap in here. So we'll see if price wants to stay above that or not. Again, we have a bullish COT, so let's continue to observe whether this is going to hold and maybe push higher to try and target these levels up here. We do have relative equal highs. Before any of that takes place, though, again, you have Friday's high and Friday's low. Okay, so that's the first liquidity pool you're going to look at. And then we have the weekly low, weekly low, weekly low, right? And then again, this Friday's high, in this case, is also the weekly high. So those are also the next level of liquidity that we have aside from Friday's high and low. Okay, so you always want to outline those and keep tabs on those when you start the week, because sometimes they will be utilized to position the opposing direction, right? If smart money's trying to buy, maybe they take out Friday's low, pair that somewhere in a PD array below Friday's low, and then smash price higher. Or vice versa, maybe they blow out Friday's high, pair their shorts with the previous week's buy side liquidity, that being the high, and then they start to drop, right? Those are scenarios that happen all the time, continuously. So that's, part of the reason why Friday's high and low are so important, and that's also why the previous week's high and low are also important, because sometimes they use weekly highs or weekly lows to do that same characteristic. So keep that in mind. All right. Yes. So again, I hope that stuff makes sense. Let me know in the chat if you have any questions. And if you haven't liked the video and you get value, definitely like the video, share it with a friend. Much appreciated. If you know anybody that you think can take value from these types of discussions, it's greatly appreciated. But yeah, so now moving on to the DXY. Obviously, you see January, February look very questionable. It just goes back to what we said at the beginning of the conversation. There's times to push, times not to push. Generally, January is a time where you lower expectations, lower your amount of trades, because who in their right mind wants to start the year and blow their account because they can't stop forcing things, right? When smart money is most likely not even influencing much. Again, that doesn't mean there's no opportunities. That just means that, you got to understand the environment. Like if you were in a battlefield fighting a war, you would not be rushing into the battlefield just because you want to go snipe somebody. You got to calculate what you're doing, figure out the scenario, strategize what you're trying to do, what the best opportunity is for you to succeed. Same thing in trading. We're financial warriors, okay? And we got to understand how to navigate the conditions as they arise. All right, so it's a little sloppy choppiness up in here. Obviously, just by looking at the chart. But generally, January is a month that is most of the time kind of bullish for the DXY. And sometimes you see the start of the year for indices have a bearish sentiment. Definitely going into April and May. A lot of times, you could see this large move on the DXY here in the seasonality. That large aggressive run higher with all three of the lines moving in tandem together going into May. That's why ICT has the expression sell in May, go away, right? Because generally the indices will be bearish going into the month of May, which is obviously, some time from now. But, it's just a good reference. Go back and study it and have that anticipation for May coming up. And don't forget that slogan, right? Sell in May, go away, right? So, yeah, we'll continue to monitor that. Let's move on to DXY now. So this large fair value gap up here, we have been calling this, if you go back to some of the other calls I did, especially, my private community students, we've been calling for this like throughout this entire run. First it was, this high, then it was a fair value gap, then it was this high. And then once it got up into there, we had a good inclination that it was going to come up into here. And obviously it's delivered completely, So we'll see if that's going to continue, right? We got to monitor this wick here. If it blows past the midpoint of this wick, we have relative equal lows down here. So I wouldn't be surprised if, again, this confirms our COT analysis that we did earlier, which had a bullish signature in the COT for the indices, which has pushed price higher. I wouldn't be surprised if that is a precursor for this, possibly looking to target these lows down here, and then possibly this fair value gap in this weekly bullish order block. Right? So going into this week, I'm going to assume that, this weekly low may be of interest. I mean, we could start the week, rally up, blow out this high, then try to go. So that's a possibility. Obviously, we have price stalled out here, similar to what we just saw in the interest rate markets, how they're overlapping weekly candles. Well, that influenced the DXY. And you could see that these have overlapping weekly candles as well. Right? So if this midpoint of this wick here is violated, that is going to be my justification to then really trust the fact that we're going to target these equal lows down here. Right? So that is what I'm going into this week looking at for the DXY. I want to see if that is going to be justified. Obviously, if not, if this ends up just smashing higher and then we see the indices come off that high aggressively, those highs that we're at right now, then obviously we're just going to get in line with that. But I'm assuming we've been so bullish. We have relative equal lows down here. We have a fair value gap. We have a bullish order block. COT showed bullish signature with the indices. We've seen the run higher on the indices take place so far. So we're just going to see if that's going to continue. And if that obviously doesn't continue and we start going against that, then obviously we'll have a conversation about that. But that is my assumption going into this week based on all this analysis that we just did. And yeah, so I hope you guys are starting to see how everything meshes together. All the back end precursor work that we do leads us up to this moment, right? To this analysis about the DXY and the indices. Because when we have that back end knowledge, it's like having pre-knowledge for a subject you're going in to study or take a test on. You want to get the right answers, right? Well, the more information you can have that stacks the right answers in your favor or stacks justification for a particular assumption that you're, assuming on something, obviously you can make a better, more educated decision. And again, that goes back to clarity, trust building, and the whole process that we try to talk about here. Okay? So I hope at least most of you guys are seeing how things start to align as we walk forward through some of these different analysis concepts and then finally get to these types of things, or to the actual analysis that we do on the assets that we look to engage on a daily basis. And so some people want those answers right away, like, oh, just do the DXY, just do the indices. Well, if I do the indices and DXY only, how are you going to fully be able to trust what it is that I'm doing and how I came to that decision on those assets? I try to show the whole process getting me to a particular asset, an analysis I do on these assets. It makes you more well-rounded instead of just going on some video and saying, oh, he thinks it's going to go higher. Well, why? Why does he think it's going to go higher? What makes that assumption correct or possibly correct or high probability? All these things that we discuss every week. And those of you that sit and go through this journey with me, you start to see why all this back end stuff is important. Right? So, oops. So yeah, that's my assumption for the DXY. All right. Again, I want to see how this wick holds. Right? So if that wick gets blown through, then that justifies, at least for me, and we're below that weekly fair value gap midpoint, that justifies the possible sell side delivery up into this fair value gap. And then if we were to blow past all those levels, like if it comes down there, doesn't show any respect, turns this into an inversion, maybe uses this weekly fair value gap as an inversion, then obviously that could justify an even deeper run lower, backed up obviously by the bullish COT that we talked about in the indices, right? But we'll talk about that deeper run as that moment arises. But yeah, now we're looking at the DXY on the daily chart. So we could see how DXY has had a pretty significant response off of this fair value gap. In order for me to fully trust that this fair value gap is going to, or this asset is going to try to target the level down here that I just mentioned on the weekly, I would have to see us break down through these volume imbalances. I wouldn't want to see us come back above this new week opening gap. I definitely wouldn't want to see us blow past this wick midpoint, right? Those are multiple levels that I don't want to see attacked if we are going to justify the downside. It's not unreasonable for them to have wanted to run up here if they do end up dropping. We did have relative equal highs here, so it's not totally out of the ordinary if they were to open up next week and then start to dump off of that, maybe seek these equal lows. We did leave these equal lows. Notice this wick here, how this wick acted as a discount array, right? It came right to the midpoint of that, which is also aligned with the weekly fair value gap midpoint. So you can start to see overlapping confluences at particular levels and justify why a specific response took place here. In this case, the response higher. So we're going to want to monitor what takes place here. If it was to open up and then stay above these volume imbalances, maybe stay above this weekly new week opening gap here, right? Because that's what this is. This gray line, that is highlighting Sunday. So you never question when Sunday is when you're doing this type of analysis with these specific indicators. If you guys want a list of those, I can share that in the community tab after the video. But hopefully, those of you that have been here for a while have this indicator and a couple of the others, because they're very helpful. They're only to identify important areas in price so we can consolidate our thinking. No indicator will tell you when to buy and sell, at least for me. But yeah, so when we open up this new week, I definitely want to see what the response is going to be from here. If we're going to go lower, I wouldn't be surprised if it starts higher, maybe rejects from this, turning this to a rejection block. I wouldn't be surprised if that takes place. Again, if we blow past this and start blowing past this and start really contesting this wick, my trust in this turning around anytime soon starts to fall off rapidly. And then obviously if DXY was to try to target this, then that run that we see in the indices may actually fail to the buy side. It may start to turn around and start to maybe attack some sell side. Again, we got to see more evidence that that's going to take place. For the time being, it doesn't seem that that is the case. I'm assuming that this came up to stop these people out. Then maybe have a response from this up candle here, the midpoint. We're kind of approaching that. So I'd like to see us open, maybe try one more time to punch into that, but then reject, max, maybe hit this high up here, use this as a rejection block, then drop. Also, this is a new week opening gap, right? So we have decent levels of potential resistance there, actual resistance. So we'll see what the response is going to be from there. But I'm assuming this will be a fake run, probably just to trigger people in from the last week. It may open up the new week, run out this high here, right? This is a daily high. So this is Friday's high. So remember what I said earlier. Friday's high and low are very important when you start a new week, because it may use this liquidity above this high to pair smart money's opposing liquidity. Like if they go lower, they need buy side to pair. So the most near term is this high here. Okay, this is Friday's high. So they may position themselves within those buy stops, then look to target the downside. You see this daily candle here. You see this daily low here. Those are relatively equal as well. So those may be justified as possible downside targets if we do get that rejection. And if we do get the rejection and it starts pumping below this fair value gap, again, that is my trigger point to be 100% confident that we're going to take out these lows here and reach for the weekly target I mentioned earlier. All right, so those are all the important elements to the DXY as of now. So again, when we do open, you want to make sure you note the new week opening gap that forms. Can't forget that, because that just adds another layer of potential resistance for us to go off of. Right, so yeah, if you have any questions, let me know, obviously, in the chat. But other than that, let's move on to GU and EU. So we see GU has left this fair value gap. We also do have a slight SMT between this low here and this low inside this weekly fair value gap. So again, we may see this look to maybe attempt one more time to go higher. Only time I get off of the downside view for the currencies here is when we start to blow past this high here. Given the fact that we have that COT view promoting possible bullishness in the indices based on the COT, this may be used as a important SMT to then try to maybe target this fair value gap in the form of a retracement, given how quickly we have slid off the face of the earth. And then obviously if DXY was to drop, and then we see this start to rally, then obviously, everything's meshed in line with bullish currencies, at least for the time being, bullish indices, and then bearish DXY. Again, we got to see if this is going to continue to hold in place. But yeah, we do have this observation here, and we'll see how the week starts with the currencies to derive a more strong opinion as far as whether this is going to retrace or if it's just going to continue to slide lower. I'm of the opinion that, based on all the other things that we looked at, I'm of the opinion that we will probably try to retrace and dig, maybe get into this fair value gap. We'll see how that takes place or whether it takes place or not. But yeah, that's my assumption with the currencies. We got this wick here too. We got to watch. Notice how it didn't even hit the midpoint, hit like a quarter point ish, and then rejected off. But again, we can't discount the SMT that we see at the lows there. All right, so yeah, that's my assumption. We have weekly high, weekly low, weekly high, weekly low, obviously, for the GU and EU. So those are the near-term targets to try to monitor as the week starts. All right, so now this is the daily chart. We have the Friday's low, Friday's high, Friday's low, Friday's high. So the first target is going to be Friday's high or Friday's low. All right, we have a volume imbalance in here. So we got to see how price is going to respect that. So far, it's respected that. It's also respected the upper portion of this weekly fair value gap. And you see the wick here, this large wick. It has respected the midpoint of that. So, that's showing that it's having a hard time getting through that. Friday ended up blowing past this daily candle's low, this daily range's low. But again, going into this new week, we do have this fair value gap. We have Friday's high. The only way I trust that the GBP USD is going to go higher is if we get above this weekly fair value gap here, or this daily fair value gap. And again, if it gets above this fair value gap, we most likely will target this area up in here, right? And then as price prints through, if it does choose to go through that fair value gap and reach into this weekly one and the weekly high, we also have this large daily wick here that you can break down into quadrants and use as short-term targets on its way to the buy side. If this was to short, right, say it opens up and then starts to decline, or maybe it ends up reaching down below this low eventually. Again, you do the same thing with this down wick here, the largest one. You break that down to quadrants. You can see the lower quadrant, right? We have a 75% of the wick. The 50% can be used as a potential target again. And then just the extreme low as well, right? So we got to see how this is going to behave. It's at the moment, you can see it's just kind of sideways. Again, you go back to the bonds and yields, and we're kind of in that environment as well, the overlapping weekly candles. Again, you can just start to see the justification, what that does to these other assets, and how it can show you, like, is it a good, clean, one-sided, trustworthy environment to trade within? If everything's in alignment. If it's not, you end up trading in things like this that most likely will stop you out almost all the time, right? So that is my assumption with the GU and EU. Now we get to the indices real quick. I'll make this one fairly quick. I know you guys have been here for a while, and I appreciate y'all that have stuck with me so far. Again, the PDF for this is going to be in the description at the end of the video. So if you guys want to get a hold of this, you can. So the NASDAQ, if we look at the seasonal tendency here, January, you can see it's very sloppy. So there's not much to go off of when we look at this chart. Overall, it does have a slightly bearish tendency. The 24-year it's the black line, so that's the largest time interval. So, that shows a heavy weight towards the downside up until February, where there's a possible seasonal low. And then all three of them align with a potential higher run. All right, so S&P pretty much the same. Here is something that I wanted to show you guys as well. I think I showed it last time too, possibly, but if you didn't get a chance to screenshot this, here, let me actually make it smaller so you guys can get a better view. I know my screen is in the way. I think you guys can see that fully. Yeah, take a screenshot of this if you haven't already. It's a good thing to keep in mind. Pretty much it's ICT's view of the seasonal influences. So, of course, you want to go do your own analysis. Don't try to get spoon-fed all the time, because that does no good for you. Obviously, after you've done your studies, it's a good help to gauge whether you were on the right track or not. But this is a rough estimate of the overall analysis based on seasonal influences for specifically the Dow. But I mean, all the indices pretty much do the same thing all the time, or most of the time. So this can also be justified and placed over the NASDAQ and the S&P as well. So take a screenshot of that if you haven't already, because it could be fairly helpful. All right, so moving on to the indices. Well, let me make sure. Okay, so as we've been doing on the last couple of assets, okay, we got the weekly high here, weekly low. You see the overlapping candles, right? So that could be problematic, okay? But putting that aside, the first liquidity you identify is the weekly high, weekly low, as always, right? Because that's the most relevant liquidity if you're looking at the weekly time frame, right? Weekly high, weekly low, weekly high, weekly low. Where did price come from, right? So we came from these lows here. It presented a S&T, right? Higher low, lower low, right? Lower low. So the run higher here, also justified by the COT analysis that we just talked about and have been referring to the whole call basically. You can see the impact. Just looking at the COT analysis we talked about, it had a lagged response in timing wise, but nonetheless, it arrived, right? And we can justify this run higher with that COT analysis and keep that in mind, right? But putting that aside for a moment, we have the weekly high, weekly lows. Where did we come from? We came off that S&T, and then we reached for, in the Dow at least, this fair value gap. For the S&P and the NASDAQ, we pretty much reached for the previous week's wick, the quadrants in that wick. We could see that it reached up into that. The NASDAQ failed to hit the midpoint. We see that the S&P seemed to be more strong, which is reasonable because the S&P was the one that made the higher low here in the observation of S&T. All right. So that's not unreasonable that it was the one that blew past the midpoint of the wick, right? And then obviously this one as well, the Dow came up and hit this fair value gap on the weekly, and now we reject it off. So again, the more near-term liquidity, when you go into the market, you observe previous week's high and low, where did price come from, where do we end up? And then now, what is in close proximity to us if we're looking to target something for the coming week? All right, well, we have this inversion fair value gap. If it can break above that, that'll be a good area of potential resistance or support if it was to break above that. If it was to break lower and get below that area, then that's obviously going to signal that price would want to continue to reach lower. I'm assuming that we're probably going to get outside of this and then possibly use this as a level of support to then try to justify a run above this, run above this. But before it does that, again, we have weekly highs to target the previous week. We have the middle portion of that wick. We have the upper 75% of that wick, and then we have the high of that wick, which again is a previous week's high, right? So we'll see if that's justified. We have multiple new week opening gaps in here. As you can see, they're all overlapping. That's another signal if price is just bouncing between multiple new week opening gaps for multiple weeks. That's also a justification of consolidation, aside from the lack of symmetry with the bonds and yields, or the consolidation overall in the bonds and yields, or the day before a holiday, the day of, or the day after a holiday. Those are times that also instigate consolidation. When you see price overlapping candles like this on the weekly or daily time frame, obviously, that may play a role. There may be a bunch of new week opening gaps in there that we're bouncing in between. So yeah, those are some important pieces of information to keep tabs on as we move forward throughout the year. But yeah, so aside from the weekly high and the weekly low, again, we have, at least for the NASDAQ, the rest of that wick and then the high. And then we have to keep in mind this fair value gap. And then for the S&P, we have this high from the previous, like 2 weeks ago. We do have, and we don't really have much else. I mean, you can argue these down candles, right? I'm not 100% sure if that was like a 2-week order block or something like that. I can't fully remember. But maybe that's, another justification as far as why price held up, aside from the S&T and the COT bullish characteristic we saw. This was life-changing. Now I understand FEG. Beautiful. I'm grateful to hear that. I'm telling you, bro. Like, I make sure that every category of information that can build clarity is talked about. Some people don't have the mental fortitude to hang around and see how everything is mixed together. A lot of people come in with their preconceived notions, like he needs to talk about an order block, or he needs to talk about just this or just that, not realizing that all of it puts things into perspective and builds on top of one another. And you become a well-rounded trader as a result. And Tony, you're a beautiful example of that. You've been with me for a couple months at this point, and you've been just telling me almost every call that more like things are slowly falling in alignment, and things just start to make more sense as we continue to do this. So, just keep showing up, bro. I'm grateful that you're getting value from this. Even if it was just you on the call, it would make me motivated to continuously do what it is that I do, because that's the whole point, right? The whole point is to help those who want to listen, right? Those that want to take advantage of this stuff, that truly love this industry as I do. Those are the people I'm trying to get in alignment with all this stuff and to help out. It's not getting rich, it's education, so you can understand. Yeah, once you understand the market, getting rich is a possibility. There's no guarantees in anything. You could work at a tech company and still never become fully successful for whatever reason, right? It's all a risk. You got to set goals, obviously, but understand where your skill set's at. Learn the different things that get you to becoming a professional. See things as a professional. Get the right information. Apply that right information. Build some experience around it, and then you have the opportunity to do amazing things. So it's a very multifaceted skill set, and most people don't realize that. They think, I just need to learn one model or an order block or this or that. It's multiple things aligned with each other. That's why this is so difficult. All the marketing behind trading puts people in the wrong mindset, and then they quit. That's why most people quit. It's because they don't fully know what they're getting involved in. They don't fully understand like what truly is required. And it's not rocket science, right? I'm not a complex individual. There's just certain elements that we got to piece together and get some experience on and understand certain things like conditions in the market, how to identify good conditions, when to sit out, when not to, when to push your model, when not to, when does your model work, when doesn't it work, right? How to think about losses, risk management, higher time frame analysis, multi-layered higher time frame analysis, so you can get a very educated understanding of what's taking place, right? These are, complex things. They're not the flashy stuff. It's not like, hey, I made 100 points here, 100 points there. It's not the the clickbaity stuff that most people want to see, but it's the stuff that makes you successful. It makes you able to understand the market, and most importantly, build confidence in yourself. Because think about this: if those who trade or are embarking on this journey truly want to do this full time, and they're struggling right now, imagine if they had to depend on trading solely by themselves with the knowledge that they currently have while they're trying to chase a model. Like, I just want the model. Imagine the stress that gets put on somebody that only trades and doesn't have all these things in alignment that we talk about on a regular basis. Just imagine those people that trade full time that think the market is random. Imagine the stress. Those people are not going to live past 50, 60 years old. The level of stress and like unimaginable things that go through their head it's beyond me. I wouldn't be able to do this full time the way that I do if I was doing that. I just wouldn't. I wouldn't be able to take that stress. I just can't. And all the stuff that I share with you guys allows you to have information that can build the trust. So then once you do get to that level where you trust yourself, you're equipped. Once you get to that level, all these things we talk about allow for that. And then it also allows you to be at peace, not like pulling your hair out every 5 minutes. Like, I don't know if it's going to happen the same way again. I try to remove that type of thought process. And that's the thing. That's why all the stuff that we talk about is constantly being talked about. It's not focused on, hey, what is the best way for me to get clicks? Because I can do that. Anyone could do that. I can go hire somebody to do that for me. Make a bunch of stuff that can be a magnet to pull people. Maybe I'll improve some of my artwork and stuff on my thumbnails and stuff eventually. But bro, that's not the point. The point is to get those, like you guys that are still with me, to the level you're trying to get to. Get you the tools that, once you do get to that level of consistency and profitability, you're able to fully trust yourself and not be pulling your hair out, so you can have a, prosperous, happy life as a trader instead of a insanely stressful, like unbelievably miserable experience. Because, we trade to have fun and understand what we're doing and be professional, and try to get all our goals achieved, not come in here, treat it like a gambling casino and risk our whole life and stress out every day and be glued to the chart 24 hours a day. It doesn't have to be that way. And, so yeah, that's why the stuff we talk about is important. Sometimes it's long and there's a lot of stuff to cover. To make a decision during the week, there's a lot of stuff for me personally to cover. I got to cover all the bases. And I just feel like, why not walk y'all through the whole process? Why give y'all half the information and think, oh, I just think it's going to be bullish, guys. Oh, I just think it's going to be bearish, guys. Like, why do that? Everybody does that. I want people to actually learn. I want them to actually know what makes me the trader I am. So then when they watch me trade live this year, they're able to see like, okay, this is what comes behind his trading performance. This is why he's able to call the market most times, more often than not, and be on the right side more often than not. Or know when to trade or not, or when to trade, So the why is so important. And that's what these longer weekly calls touch on. And I'm glad people like you, Tony, and obviously Maddie, one of my private community students. And I'm going to butcher your name, but Nuti Fafa. I love the name, by the way. But that's why you guys are going to be great. That's why you guys are going to be so much better than you are right now by this time next year, or even 6 months from now. Tony, he's already saying that he's making some strides already, being able to understand certain things and just witnessing how stuff continuously plays out based on a lot of the stuff we break down with no other insight. I'm not taking information from nobody else. Like, I do this on my own. I don't really watch anybody, because you get to a point where you're not going to want to invite a bunch of people that you don't know if they know what they're doing. I have like a handful of people that I trust, that I watch and support, because, they supported me. And, good traders always have more wisdom. You know what I mean? You'll never stop learning lessons from other traders that showcase this stuff live, even if you're not studying to figure out their model, their experiences in the market, they're invaluable because you have your experience, I have mine, everybody else has theirs, and there's beautiful lessons that one person may learn versus another person. And for everyone to get together and share those moments and be vulnerable about the hardships and share process-oriented stuff and different ways to sharpen your skill set. I mean, everybody will eventually have that. We all have that in us. Everybody has value, and it's because we're all unique, and trading is unique to everybody. But there are some core principles, obviously, like all the analysis stuff that we talk about here on this channel and in my private community that they're non-negotiable. Like all the stuff we talk about today, it's not subjective. It's not, it's going to change here and there. No, there are always going to be these specific elements like weekly highs and weekly lows, the liquidity points, the relationship between the markets, how that influences what our decision's going to be within the DXY and the indices or even the currencies. All this stuff is like super solidified. It's not something that is opinionated. It's all based on, okay, this is the relationship that truly takes place between these assets, and this is what should take place as a result of that. And if that doesn't take place, then we talk about that scenario as well. So I'm grateful that you guys continuously show up and get value from this. Again, if it wasn't for people like y'all, and the satisfaction I get from hearing things like what Tony said earlier, I wouldn't be doing this. I'd just be in my own lane like I was for such a long time. I just feel like if you get blessed, if you have blessings, you might as well pass the blessings on, right? Especially if there's people that love the thing that you do as much as you do. It's a wonderful thing. And trading, as you guys probably know, it gets kind of isolated, so it's always fun and fulfilling and super satisfying to be around people that have like-minded views on the thing that you love the most. So yeah. But yeah, so that is my assumption for the higher time frame weekly chart. Right? Again, we have that SMT. Price has responded off that COT that we talked about earlier as well. So we're looking for weekly highs, the wick components. Also, if we do end up pushing continuously higher, we have this up candle here. Again, if we close above that up candle, then obviously we may make an attempt for these upper range targets as well. So we'll see if that takes place in the coming week. I wouldn't be surprised though, especially if we're looking at the Dow. I wouldn't be surprised if we open up and then try to drop down, maybe look to utilize this weekly bullish order block. What invalidates my run higher is going to be the midpoint of this down candle. If we get down below this fair value gap, the low there, if it just blasts through that, then obviously my eye will go down to this wick, the quadrant levels within that wick, and then the relative equal low capacity here below these lows, and then potentially, sorry about that, and then potentially these equal lows here. It's a triple low. But again, unless that is fully confirmed, we're not gonna jump all over that until it's fully proven, because price has been very consolidated, right? It's been back and forth range bound. We have overlapping weekly candles. So, we want to be very cautious and make sure we consider all the stuff we talked about today and just let price speak to us. Plus we're at the end of the month. So again, you want to adjust your risk exposure, especially if you're trading funded accounts. You don't want to be a madman trading in conditions that are not favorable. There's obviously opportunities always. There's always going to be some reason for someone to get into a trade. The question is that reason good enough to justify you risking real money and risking things related to the goals that you're trying to achieve in your life? Man, I appreciate you saying that, Tony. It's a blessing for me as well to have people like y'all to just, talk about these things too. Because I love talking about this stuff. I love this industry. It's changed my life. It's on its way to changing my whole family's life. Because I have a couple people in my family that are now trading as a result of my results, which is funny because they all doubted me at first. They all doubted it's possible. They all called it a scam. They all called it this and that. They didn't understand it at all. But luckily they saw me making money here and there. Then they saw me quit my job. Then they saw all these different things. And it really opened their eyes. So some people need more convincing than others, especially when it's family. You don't want to try to shove it down their throat or criticize them or anyone that doubts. You don't want to criticize because they just don't know what they don't know. So it is what it is. They'll eventually see when your lifestyle changes, when you're able to hang around more, when you're not stressed out as much as they are, they'll see, whether it's friends or family. Don't hold anything against anyone that does doubt, because eventually you're not going to worry about it anyway. And they're going to be forced to respect what it is that you've dedicated so much time to, and in some cases dedicated your life to, in my case. So, but yeah, Maddie, man, it's nothing but love, bro. Maddie, you know the vibes. And again, Tony, it's a blessing to have you here as well. So I appreciate your attention and support. We were grateful for the free knowledge. Decided to stick to one model for this month with your risk management too. Beautiful. That's amazing, man. That's awesome. I'm grateful that you're starting to see results. See, I'm telling you that there's truth to all these things. And sometimes it's long-winded. There's a lot of different components, but they're not rocket science. It kind of helps that I'm not complex. I had to watch ICT's videos and then sit to myself and try to explain it to myself in terms that made sense for majority of the time that I was in the really trying to learn phase. And it was really difficult. I didn't have nobody to sit and do this type of stuff with. I had some people that were learning with me at the same time, but unfortunately you look back and majority of those people fall off. There's 2 people that when I started trading stuck around. There's only 2 out of like 50 or more. So, that percentage of people that win and fail, the ones that prosper and the ones that just end up quitting too early is a real thing. But if you just hold on long enough, you get around the right people, you listen to the right voices, and you just stay focused and try your best to control yourself. Don't overtrade, don't over leverage. Think about things in, 5-10 years time. Think about things from a set of trades as well, like I mentioned in the last video, versus every single trade. Things start to get a lot less stressful. If you start to get more organized, things become a lot better. And there's right and wrong ways to do this type of stuff. And I'm glad that you guys are starting to see that. And I'm glad you guys get value from the things that I share, because these are a lot of the things that I wish I was told. And of course, I learned a lot of things from ICT. A lot of this stuff that we talk about has, came from the wisdom that I've been able to gather from all of his content, even the stuff from when he was on Baby Pips. Like, I have some of those videos. like it was a lot of videos and time that I spent. So I'm glad that you guys can now get some value from those experiences that I've had. But yeah, man, I'm grateful to hear that you're deciding to stick to one model. I'm glad that the risk management tips that we've talked about are starting to help you see results. And again, I hope that all the stuff we talk about helps also mitigate the stressfulness. Because again, all this stuff is not only to give you clarity and organized process and organized decision-making process, but it's also to help you eventually lower the stress. Because if you, in fact, want to trade full-time, you got to realize that when you trade full-time, it's a different world. The level of stress multiplies by 10. Because now your decisions you make in a market filled with probabilistic views, it being in that environment, if you're not prepared, it's like going into a battlefield without your pistol, without your weapon. And you're just like, you got to be prepared because bullets are going to fly. Life's going to happen. I had a failing relationship with my child's mother when I first started trading. That was damaging, still is. I still deal with a lot of chaos from that. I have had multiple people in my family pass away in the last 2 years. I've had to deal with that. Things start to take place and that are out of your control. And if you're not systematized, if your process is not totally solidified based on your rules, based on logic, not emotion, if that's not implemented by the time you go full time, it won't happen. It will be impossible. And most people don't learn that lesson. They don't stick around long enough to even be able to hear that type of advice, to be able to gain that type of wisdom. And, it's the stuff that's behind the curtain. Like the things I just mentioned right now, that stuff's behind the curtain. It's behind the flashy, I'm going to be a millionaire tomorrow. It's behind all that marketing. People don't see that side of stuff. And people don't like to talk about it because people get, some people get discouraged, because for one, they don't have the right information most of the time. And then they get slapped with that. And then they blow a bunch of accounts to the point that they just decide to quit, But that's the reality of it. But it doesn't have to be that way. Most people decide to make it that way, But the things, again, that we do here, it's trust building, it's clarity building, it's being able to allow you to trust yourself. And then, everything else will surround that as you become a more proficient, more effective and lethal trader in these calls and in your own experiences. You know what I mean? But yeah, bro, stick to what it is that you're doing that you're starting to see results from. I know you're somewhat new, right? You're somewhat new. So you got a long way to go. But if you're just implementing these very simple things and you're already starting to see results, do your best to stay away from what everybody else does. You don't have to trade 5 trades a day, 10 trades a day to be profitable. You don't have to trade every single day in the market or every day that's available to us in the market to be successful and trade full time. You don't have to over risk and over leverage to pass funded accounts. You don't have to over leverage and over risk to get to your goals quicker. You don't have to do any of that. If anything, it makes it harder to fulfill that if you operate in that way, And so this really reduced my stress. I no longer try to force trades or trade outside of my trading hour. If I don't see anything, I close the charts and come back the next day. Wonderful. Absolutely wonderful. Again, you're still somewhat new, brother, and you're already learning most of the lessons, whether that's from your own experiences, whether that's from, some of the stuff we've continuously talked about here and in the time that you spent observing some of the content. You're already 100 steps ahead of everybody else. All these people that have the same experiences as you but are blowing their accounts continuously, you are so much further ahead of people just by the statements that you've just mentioned. So take that as a massive win, a massive motivator, because I'm telling you, it's the simple things that will get you to where you're trying to go. It's not the over leveraging. It's not the flashy headline things or thumbnail, 100,000 here, 100. It's not none of those vibes that will get you to where you're trying to go. It's being a professional. It's managing risk properly, because at the end of the day, we are risk management professionals as traders. Because the people that trade professionally for like firms and stuff, they're called financial managers, right? They're money managers, right? They manage accounts. They're account managers, right? That's the fancy word for being a trader. What are you doing as an account manager? You're managing risk. That's the main goal, right? Profits come after managing risk. Because if you can't manage risk, how the hell are you going to make profits, right? If you can't have a bunch of guidelines and rules in an in a wild market that you set the rules for, right? There's unlimited rules. You can do whatever you want. You want to go in there and blow your whole account. You want to go in there and try to risk your whole life savings. You can, right? But it's the ones that have structured rules to protect yourself, to be a risk manager. Those are the ones that get put on a pedestal. Those are the ones that are the most successful. And those are the ones that end up doing this full time. And you don't have to be a bank money manager to have an amazing life doing this. You don't have to make 20 grand a month to have an amazing life as a trader. See, most people don't even got to make 5,000 a month, and you could still live a beautiful life. It's the perspective must shift. And again, following rules and doing what you're doing at this moment, if you continue to do that, I'm telling you, like I said earlier, 6 months to a year from now, you're going to be unrecognizable to yourself. The way you navigate the charts, you're not going to be able to recognize who that trader was when you first started. And you're going to see just how dumb, idiotic these people are that are on the internet claiming that they do this and claiming they do that. Some of them do, and I got massive respect for a good handful of people. But majority of the people that do this whole flashy, this and that, rented Lambos and all this crap to try to pull people in, they have really nothing to offer except selling people a dream. And it's unfortunate because then it makes the mindset for traders that truly have ambitions to make this a reality, it makes them discouraged and pushes them away from these types of conversations, these types of lessons, the things that we've went through today, because it conditions them to be signal junkies. Like, I want to, have this big payout just because I feel like it, and this person said he can do it, so let me follow his indicator or his this and that, and I'll get there, when it's totally not the case. And it conditions their mind to not be receptive to conversations like this. And obviously you guys are totally different. Look at what Tony and Nudie Fafa. Tell me if I'm saying that right, bro. Tell me, am I saying it right? I hope I'm saying it right. Nudie Fafa. It's so fun to say your name, bro. I hope I'm saying it right, though. I don't want to butcher it. But yeah, what all you guys are doing, Maddie included, right? One of my private community students. You guys see the results and are receptive to this type of stuff. So I'm telling you, you see the difference, and eventually, hopefully, more people see the difference, and we can play a big role in hopefully playing a small part in changing this industry, because it's absolutely amazing. It's absolutely amazing. But I'm proud of you guys for sure. But yeah, let's do one more part to this analysis and then call it a day. Okay, beautiful, bro. Beautiful. I'm glad that I said it right, bro. I'm over here thinking like, oh God, I'm about to say it wrong. Oh man. It's definitely fun to say, bro. I'll give you that. That's for sure. But yeah, so with all the stuff we talked about with the indices, we scrub over here and we see the shift in market structure. We have that SMT that we talked about a minute ago. And that is also in conjunction with the COT that pushed price higher. That's kind of justifying price going higher. But then we look back at what has taken place recently. We see that it's been a lot of deep retracements. So we've been in very high resistance environments since January began. Okay, so these deep retracements, multiple overlapping of candles, all that all is signature showing us that it's potentially high resistance, And if there's a lot of new week opening gaps overlapping and prices just bouncing back and forth between them, not really interested in going one direction or another in any meaningful capacity, then obviously that is a condition that, price is going to utilize to stay stuck. And then again, mix that in conjunction with the interest rate markets like being consolidated or not really moving as well. That is also a reason that things can end up being slower in the DXY, the other currencies, and the indices. Right, so we're going to want to observe what takes place. We have, again, shifted market structure here, at least from a daily perspective. But if we go back to a weekly perspective, it's not quite as convincing. So we just want to continue to keep that in mind and observe and understand that the conditions we're in are possibly going to be a little bit more rough, especially going into the end of the month, because that's just, it's just part of it. And then, of course, the fact that it's January. Again, that doesn't mean there's no opportunities. It just means you need to lower your risk profile. All right, so now looking at what we see, so we got that shift. We have an order block here. So let's definitely observe if price is going to want to open up and then maybe drop down into this order block. We'll see how it responds there, at least for the Dow. We also have an order block here. So we're going to want to monitor how that response is. We have this very big wick. So as we always do with the other wicks, you want to break that wick down, get the quadrant levels, measure out the midpoint and the upper 25%, see if it's going to give a fast response from there. If it does, then that justifies continuous bullishness. That's another signature in price that we want to observe. And if we see that, along with the fact that we're also overlapping some new week opening gaps as possible support, then we'll be able to trust the fact that, price may want to reach up into these upper levels as a result. And then of course that's in conjunction with all the other things that we've discussed this morning, and then continuous monitoring of the different assets, right? So yeah, I want you guys to also, if you didn't from the previous week, I want you guys to make sure that you take this into consideration as well. These are the weekly questions that we got to ask ourselves. Here, let me actually minimize a little bit. I appreciate you subscribing, bro. Whoever just subscribed, you're awesome. I hope to see you here the next call that we have. I hope you got value as well. But yeah, appreciate your subscription, brother. But can you guys see? Let me see. Let me actually minimize this a little bit. See if I could pull this up a little bit so y'all could screenshot this. But yeah, so this is the weekly reflection template, right? Those of you that like to analyze your overall performance and stuff on a week-to-week, day-to-day, month-to-month basis, these are just some things that I do every single month. I do it every month because, again, I look at things as a set of trades or a set of information versus every other interaction is going to depict whether I'm successful or not. I look at things from a larger perspective. So definitely take a screenshot of this and use this as a template. So each week you have something to do. And then, of course, all the stuff we've talked about today, aside from, some of the side conversations that we had, which, again, I hope I've answered all you guys' questions. And I hope all the side conversations were of value to you guys as well. I know it kind of made the call a little bit longer, but, again, thank you guys for sticking with me. And I appreciate all the questions and, like, testimonials and all that stuff, because I love to see the progression and the fact that you guys are implementing this stuff, because this stuff changed my life, truly. And I pray deep down that it also has a big impact on how trading impacts your life as well. And when you get to where you're trying to go, and, I played a small role in that, I want you to always take full credit. I didn't put on the risk, but I'm grateful that you guys value the time that I spend with you, because I value the time that you spend with me as well. Right? But yeah, so at the end of every week, every month, every day, whatever you choose to do, consider these questions, right? Be honest. You got to be very honest with yourself, because, to fix a problem, you always have to acknowledge there's a problem first. So if you don't acknowledge that you overtrade all the time, if you don't acknowledge that you overleverage, if you don't acknowledge that you don't follow your rules, right? If you don't acknowledge that you're, not doing the analysis fully because you're just trying to hurry up, or whatever the issue is. If you don't acknowledge the problem and identify it, regardless of how uncomfortable it is, you're not going to be able to improve. The first step to fixing a problem is acknowledgement. So we got to be able to acknowledge the issues. You got to acknowledge when you do things incorrect. You got to acknowledge the negatives. But look at the negatives as a learning experience. You got to reshape the way you look at improving the mistakes you make, the downside, the drawdown. Reshape the way that you look at that. Blown funded accounts. Just look at them as opportunities to grow. Be excited and happy when that type of stuff takes place, because you now have an opportunity to become even better than you were before you made that mistake. And it sucks sometimes, I know. But at the same time, if this was as easy as all these so-called idiots, these idiot gurus want to say or claim it is, then everybody would do it. Everybody would be successful. And, everybody would, not have a job. Everybody would just be trading if that was the case. We're a special breed of person to participate in these markets the way that we do, because It takes so much mental fortitude. It takes so much self-awareness, which is why this is so important. This type of component is so important. But it's so rewarding. And I know you guys know, even if you're not fully where you're trying to get to, the grind up to the point that you're reaching for it, you're going to appreciate it when you look back. So don't beat yourself up about anything. Take mistakes and downsides and issues that you come across. Look at them as assets, because those issues are going to be the reason why you eventually become the trader you're going to become. Because overcoming the fire that we get put through as traders is the exact reason why we're able to succeed. This takes a special breed of person to face failure on a daily basis, weekly basis, monthly basis, sometimes yearly basis, and still have that deep down self-belief and conviction that you will make this happen for you and your family. It takes a special person to do that. And again, not everyone's cut out to be that way. Not everyone's cut out to be a trader, but the ones that are able to look at things that, like I've just mentioned, and just continue to push forward even through adversity, it not only makes you a stronger individual, it makes you more driven and more solidified in your convictions and belief in yourself that you will truly turn this into something special. But at the same time, it makes you an amazing trader. It makes you more resilient. And it's an amazing journey. So appreciate the upside, appreciate the downside, and, look at every bad experience as a learning experience, because you have to, you got to turn losses and mistakes and issues into progress, because without those mistakes, without doing it incorrect, how are you going to know how to do it right and truly understand that you did that particular thing right? I wish it was, as easy as everyone tries to claim it is. It gets easier, I promise. And you guys going through these types of calls and going through these processes with me, you'll start to see that it becomes a lot more fluid. You become a lot more systematic, and you get on the chart, you know exactly what you're doing, what targets it could hit, what your risk should be, when you should trade, when not to trade. All these questions get answered. And, eventually things become a system. And, if you operate within that system, you'll be surprised at what you can accomplish. And part of that has to do with reflecting weekly, daily, monthly, yearly, whatever it is that you choose to do in terms of your reflection and self-analysis process. But you have to do it. You have to do it in some capacity. And some of us are really busy, right? Some don't have time to sit and do these types of things. But at the same time, it's a vitally important component. So I highly advise that you guys do this type of stuff. And maybe even, in the near future, we can do one of these analysis or reflections, self-reflections. We can maybe do one of them together, and you can kind of see how I do it. So, and if you guys have any other questions, maybe you have other things you'd like to add to your analysis process for self-reflection and different things, you can obviously add them. These are just the things that I do. There's some other things that I do as well in terms of psychological analysis. I have books that I read and different types of things, so I can give you guys those resources as well if you'd like. But at a minimum, you want to make sure that you're at least spending some time reflecting on the way that you performed, the things that you did wrong, but then also highlight the things you did right. I probably should have added that here as well. What did you do right? So add that to this list, and then fill out whatever it is you think you did positively and would like to carry over to the next week or day or month, right? But yes, so all in all, right, we're going to assume, right, just a quick overview before we put a ribbon on this. We're going to want to see what takes place inside the fair value gap here with the yields, right? We're going to see if this is going to have strength to push lower, or if it's going to use the weekly fair value gap to then try to justify a move higher. We have relative equal lows down here for the 30-year. I mean, you can kind of see that there's an SMT there, so that's kind of suspect. We'll see if that's going to hold. We can't disregard the fact that we traded to and back through the fair value gap on this weekly time frame, and now we're closer to the low. A couple of them have actually blown through, and they're kind of already below the fair value gap level, right? It's something that we're going to have to monitor here, right? So the fair value gap here, we are back at the lower portion. We're kind of already way below this one. So we're going to see if it opens up and tries to retrace and then rejects off to maybe target this. Ideally, that's what I would like to see, is this reaching lower in some capacity to try to attack some of the sell side down there. And then obviously, again, as a result of that, we should see DXY potentially at some point favor maybe using this up movement as a rejection block. Maybe it's going to hit that or maybe fail to get to there and then try to fall in alignment with what the yields are doing and try to target some of the sell side, possibly even down to this level here. As we mentioned on that weekly time frame, we could see that there's a fair value gap down here. We are almost fully done filling in the rest of this weekly fair value gap. I wouldn't be surprised though if we open up, maybe give a jolt higher just to fill in the rest of it. Then it gives us a dump off to the downside, trying to target that area. But we'll see if that takes place. It'd be honestly a different story if this low would have hit that fair value gap, right? But this is kind of suspect to me, right? Like it left that intentionally, right? So why did it do that, right? And we've also hit, for this time frame, the 2-week fair value gap, we have completely filled in the rest of it. So that may justify price leaving that upper portion available, and then maybe looking to target the downside from this area here without even attempting to try those highs again, right? So again, I got this level. Let me just mark that for completeness sake. This may end up acting as a rejection block. If I could find it. Rejection block. So yeah, we're going to watch that. We'll see if it stays below. And then again, if the yields drop, that justifies a downside run. So we're going to continue to watch and see if that's going to be what takes place. Again, I wouldn't want to see us try to attempt up here much. So we'll see what takes place. Again, if we get down below this fair value gap down here, this possible inversion, that's exactly what I'm going to look at it as. We have down candles here, consecutive down candles, a fair value gap, and we have a swing low here to justify if it breaks through that, that's 3 PD arrays. Remember, if we're looking at price, we want to see 3 PD arrays broken to change overall direction, right? If we're going bullish, we need to see 3 PD arrays break to the downside in order to change from bullish to bearish, right? So very, very simple way to justify a particular direction, or if we're changing overall direction, at least for the short term. Sometimes even the near term, especially if it happens on the higher time frame. Like if it happens on the weekly where 3 PD arrays break, then a lot of times when one PD array opposed to the direction, like say we're bullish, a lot of times even one PD array breaking on the weekly chart sometimes leads to a pretty large move, opposed to, say if it was bullish, say it breaks down through a bullish order block, right? Say it smashes through that on the weekly. A lot of times that move is going to be pretty big because it's on the weekly chart. Maybe it sustains for a couple weeks or turns the whole thing around, or maybe it just retraces through that PD array to reach for another one. All in all, right, if that takes place on that higher time frame, those are large moves as a day trader. So we just look for week-to-week identification. COT, seasonality, higher time frame analysis obviously allows us to have a larger view, more long-term perspective, whether that's what the month could do, what the quarters can do, right? When the new quarter comes, we're going to go through some quarterly analysis so that we can kind of gauge what the sentiment could be going into that new quarter. give us a justification for what we could potentially expect on a 3-month basis, 2-3 month basis. Part of that again has to do with COT because it's a lagging indicator, but it's also a beautiful higher time frame gauge as well. So we'll talk about that in great detail once we get to the new quarter, which I believe is coming up soon, or at least maybe I think in like a month or so. But yeah, so in terms of this, if we break down through this inversion fair value gap, this swing low, and these consecutive down candles, but preferably once it breaks through this, if we have a large candle like this take place, then obviously that justifies our assumption that we may look to reach into here and try to maybe blow these out. And then obviously once it gets down into this weekly level down here, if it does blow all that out, we would then go ahead and look and see what takes place. My reality is getting payouts, my family live forever, and never forgetting what it took. Damn right, bro. That's admirable. That's an admirable perspective, brother, for your goals. Just keep that in your mind every time you're trying to go in and operate as a trader. That type of mindset, those reasons why, in terms of why you're doing this, that'll stop you from breaking your rules. Because then you'll think twice. Just like me, I think about my daughter whenever I'm, trying to break my rules or get impatient or anything like that. It's always a reminder when I think about my kid, because if I break my rules, I'm basically telling her that I'm willing to fail. And if I fail, then she's going to look at daddy as a failure. And I refuse to let that take place. I will not. I'll die before I let that take place. And I don't plan on dying. So it is what it is. Great C's this week. Life-changing. Yeah, perfect. It absolutely can be life-changing, Tony. And I'm grateful that you're taking so many strides. Just keep showing up, right? Every week, starting in February, second week of February, we're going to be live trading. So we're going to be in the market, getting our hands dirty, identifying opportunities in the market, utilizing this information, not just Sunday calls. It's going to be like 2 or 3 times a week. And I'll let you guys know the schedule when it comes to that, when that time comes. But again, the line in the sand for me for this week, as you guys know from the last couple of call outs, in terms of bias, we have a line in the sand. My line in the sand is this fair value gap, because once we start violating that, we violate this consecutive string of down candles, this low and this fair value gap. That's 3 PD arrays, so that would justify targeting the wicks here. That would justify targeting the lows, and then again in conjunction with the weekly fair value gap. So that is my assumption for the yields and the DXY. For the bonds, if the yields are going to be justified in trying to reach lower, the bonds should have the opposing view. So they may look to want to continue reaching higher. We've traded through the fair value gap, back through the high of the fair value gap. Looks like it's trying to contest a little bit more buy side, and we have been super bearish, so it's not unreasonable for them to possibly want to pull us up and change direction a little bit to kind of offset some of the downside that's taken place. We have filled in a fair value gap fully here, like I mentioned. So again, it's not unreasonable for them to maybe want to target this wick, the high, and then maybe the fair value gap. One of those levels, including this previous week's high, and then the high from 2 weeks ago, which is right here, can also be looked at as a possible magnet in price if we do look to change and go higher for a little bit. Then again, we also have this high. We have the wick quadrants here. For this, we have the upper quadrant. But then again, we also have this fair value gap we got to watch. If I take this off, we have a volume imbalance that we traded to and through one more time, back to the buy side. So we'll see if, again, this is going to turn us into a potential reversal to try to get into this retracement, capture a little bit of buy side, and dig a little further into this weekly bearish order block, right? So we'll see what takes place once we get up in there. That's my assumption for the bonds. I would like to see them continue to press higher a little bit, and then whatever takes place when we get up here, we'll make a decision on when that time comes. But then as a result of that may instigate the currencies reaching back higher. right? But for the currencies, like I mentioned earlier, I need a little more evidence to try to jump behind that. So again, that's my assumption. We do have SMT at the lows here. We have purged out this low here for EU, and we've bounced off this weekly fair value gap. So again, that justifies this possibly looking to retrace. There's been a lot of back and forth, balanced price delivery in here. Why do I say that? Because prices, offered sell side, buy side, sell side, buy side. Lots of wicks going back and forth. So, maybe a little bit of high resistance in here if it tries to smash higher. But then you look at the GU, hasn't really done much to the buy side. So it has a decent ability to try to get back up here, especially if this SMT stays intact, especially if the indices continue to run higher, and especially if the bonds look to continue to go higher, as we talked about, could be a possibility. That all justifies this potentially retracing off the heels of this dramatic sell-off we've been seeing in the foreign currencies. Okay, so that's my assumption on the foreign currencies. And then last but not least, again, we see that the indices have a possible likelihood of running higher. All right, so we're just going to have to continue to see if that's going to continue off the heels of bullish COT. And we have this weekly high here, weekly low, weekly high, weekly low, so on and so forth. We have a previous week's high as well up here. We've blown past the midpoint of this wick, so we got to see what it's going to do as we breach this candle. Is that going to turn to a bullish order block, right? The way we're going to view that is when price opens up here for the new week, does it trade back lower and then aggressively push away using this as a possible bullish order block, right? If that gets justified, considering the COT, considering all these things that we have talked about, then we'll be able to continue to press price higher with the expectation that the yields will possibly continue lower, which then, of course, pushes the DXY lower. And then obviously that would justify the whole analysis we did here, especially if it breaks this low and uses this as an inversion. All right, so let me just pull up this. So again, we have a shift here, shift in market structure across the board on the indices, bullish. We have this buy side here. It is kind of suspect that all these previous runs that we've seen have definitely been deep retracements just to press lower. But then again, we have SMT at the lows here, as you can see, right? Between the Dow gave us a lower low, while the S&P and the NASDAQ gave higher lows, on top of the bullish COT signature we talked about earlier. All right, so with that being said, this shift in market structure may become a whole lot more influential because of the back-end knowledge. Now, if I came in here and said, oh, there's a shift in market structure, how in the hell are you going to trust that it's a shift in market structure, right? What is the back-end knowledge? Maybe they do trust it, maybe they don't. But for me, I wouldn't have trusted anything. Even if a person said, oh, there's a shift, I still wouldn't have trusted it. What allows me to get to trust on my own? All the information that we've talked about today, COT, seasonality, intermarket relationships, all those types of things, okay? All that stuff's very important for you to trust yourself, because that's the goal, It's great to come in and soak up the wisdom and experience that I've been able to acquire, and you obviously see the efficacy to it. But again, at the end of the day, as great as I think I am, right? The goal is to get you guys to be independent, so because God forbid something happens to me, right? Or ICT, God forbid, and if you're a full-time trader, you want to be able to have that back-end knowledge to trust yourself. And if you want to pass it on to your kids, your friends, your family, you want to make sure you have that type of information. And I'm obviously going to do my very best to try to get you as much information that can get you to that point as possible, in the most simplistic, organized, effective way possible. All right. So, and I'm glad you guys have been getting value throughout the last couple of months, couple of weeks, and God willing, we're going to continue to pour into that, and hopefully get all you guys to at least close and well on your way to where you're trying to get to as a result. All right, so my line in the sand for bullishness to change is going to be if this down candle is violated. That is the first red flag. We should see this be able to hold if we are going to be in a condition that's very quickly going to run to the buy side and be strong bullish. But if it just starts slamming through this, I mean, it's awfully similar to these deep retracements that we saw here from the previous weeks, right? We've been in a very high resistance environment. Again, January brings that generally. So we want to make sure that we're not pushing aggressively. It's almost the end of the month. So the month has been, favoring the downside, kind of been all over, back and forth, to be honest. But yeah, we'll see what happens. So yeah, that's my line in the sand, is this candle here. All right, don't forget to outline Friday's high and Friday's low. Right, so this is Friday's candle. Right, it's also the previous week's high. So keep in mind Friday's low, Friday's high, Friday's low, Friday's high. Those are our first liquidity targets. The second layer of liquidity is going to be our previous week's high, previous week's low. And then anything in close proximity to that, depending on what direction price goes. In this case, I would like and prefer to see price continue to go higher, yields go lower, DXY go lower, bonds go higher to justify the bullish run here in the indices, and off the heels of the bullish COT analysis. And as a result, if that does take place, then obviously that will influence the currencies to do what we discussed earlier, and possibly see price want to make a break for this fair value gap here. I wouldn't be surprised as well if this at some point maybe even opens with a gap lower to try to clean up some of this and then go higher, right? But maybe that doesn't take place. But again, if all that stuff that we just discussed takes place, then I wouldn't be surprised if this does end up coming off the heels of this SMT and they're reaching higher up into this fair value gap. All right. We also have this order block here to consider as well. So you definitely want to keep that in mind if we start pulling up. It's also a new week opening gap. All right. So yeah, that puts a ribbon on today's call. Again, I'm going to leave this PDF in the description. I just got to go make a link for it real quick. But yeah, other than that, I hope you guys got value. I appreciate all the testimonials and all the updates that you guys gave me today. I'm super grateful, and thank you to those of you that were able to stick around throughout the whole call. It pays to stick around and listen, get all the details, and listen to some of the other students' experiences and stuff like that, which I'm grateful that you guys have shared with me. And I hope you guys feel just as comfortable sharing some of the hardships that you face as well, because I guarantee that that's also helpful for many others to also feel like they're not alone in some of the struggles that they face, including you guys, and whoever else ends up stumbling across our conversations. All right. But thank you guys yet again. I hope you guys got value. Again, if you guys ever need anything, definitely hit me up on Instagram, through my DMs, hit me up in the comments, pretty much Instagram, and I'm on Twitter too, or X, whatever you want to call it. If you wanted to reach out to me on there, you can also do that. Primarily though, I'm on Instagram and YouTube, so preferably leave questions or anything in the comments, and comments on my Instagram as well, or DMs. But yeah, with that being said, you guys, thanks again. I'm grateful that you guys have gotten value. I hope to see you guys here for the next call next week. I may do a call on Tuesday just to get an update and kind of get a feel for what's taking place throughout the holiday. I may put it in short form, or I may go live. Haven't fully decided yet. Depends on what I got going on Tuesday. But yeah, other than that, again, thanks, and I'll catch y'all on the next one.